Okay, today we're looking at CBA, the Commonwealth Bank, on a weekly chart. Just seeing, because it is a stock that falls into criteria with a low level of debt to equity and a high operating margin. So basically that just means doesn't matter if it's Commonwealth Bank or any company, it's a solid company. So now we're going to have a look at if we go back in time and bought Commonwealth Bank every time it came into a new high. Okay. Going back. Coming back a while here. Bear with me. I just want to get the GFC in. Okay, well let's start it from, well, you can see, but let's start it from here. So 2005. So 2005, $13. You can see it's all-time highs, and the magic blue line is our stop, the 20-week exponential moving average. So the idea is if it closes below that with a nice red bar, then we get out and we wait for the next all-time high. So we would have bought back here in 05, call it $13, and we got our big red bar. So we would have been out at $16 and then waited until here, and we would have got in at $18 on October the 6th, and then we would have got out at $21. So yeah, it only just closed below. So anyway, so we're out at $21 in 07, and we all-time high. So in September 07, we were in at $23, and then that day happened, but we would have been out at $23.50. So we still didn't lose any money, and then there's no all-time highs happening yet. So, but at least you would have ridden all this out. You wouldn't have to panic. So we keep going. So really, it's not really an all-time high. Okay, so we say here, okay, so we've made, because we don't know, this is the future. Okay, so we buy here at $26 January 10. Then, okay, it didn't drop below, and okay, here we go. And then we're out at $25. Might have picked up a dividend along the way. But anyway, we're out, and we're not back in yet. So we're writing out all this news, all this noise, and then take out the all-time, become new all-time high here, $27 in 2012. And we ride that up. It's not a convincing red candle, but let's just say you got out at 37 and 13, and then you bought back in here. So you bought back in at 43 in September 13, and you held it. Okay, we had our dip below, so February 14 you're out at 43, and then we're back in at 46 in April 14, and then we're out at 48 in September 14. You might pick the divvy up, and then here. So then in December 14, we're at 50. And then we're out May 15 at $55. And we're out for a while. So you're missing out on dividends along the way here because you're not in it. But I'm looking at stocks that are going to grow your super fund, not necessarily dividend. So not a retirees portfolio. So we still haven't made all-time highs yet. And okay, here we go. All right, so June 19, we make an all-time high, and then we're out again. August 19, so we're out for break even, and then we make. Okay, so let's stick to the rule. So we buy here at 66 on September 19, and then very close. Anyway, let's just say you're out on February 20. You're out at $67. Okay, but all right. So we're out. We're out. Okay, here we go. So we're making an all-time high at 75 on March 21. So we're in, and then we're out at 87, and then we're not in again. So again, we're just riding out all this sideways movement. All right, we made an all-time high here. Okay, so we bought there. Okay, we're not in. Okay, we're out now. So sold at 93, put at 98. So we lost $5 there. That's okay because we're sticking to the strategy. All right, but now this is when it really pays off. So we make a new all-time high here, $102, December 23, and we've ridden it all the way up. And this last week was very interesting. So this is literally that big red bar is last week. This green bar, so this is as of Tuesday, the 25th of February. So we haven't closed below that line here, but according to our strategy, if this week finishes with a nice red bar, then we're out. So we'd be out at $148 after riding it from $105 and picking up dividends along the way. So there's just some interesting facts around buying. Again, the two criteria to get in there is you've got to be in the ASX 300. So that's one, which is stocks that you can buy in your super fund from the ASX 300. They've got to have a low debt to equity and a high operating margin. And then that ticks all the boxes, and then we follow our rules. Right, if you like that, send me a comment, subscribe to my weekly emails, or weekly posts, I should say. Have a good day.